What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you a state of the market and some upcoming events, some earnings, anything I could foresee that could potentially help you throughout the week. If that sounds like something you are excited about, consider subscribing, as I do provide daily updates as well to provide you ready for the day and the week ahead in this glorious market. So let me go ahead and throw up this bad boy, kind of what I'm looking at. One thing to go ahead and get us started out, we are getting into the holiday season here. So you have to understand that things are going to start kind of dying down until essentially until Q1. So once after all the holidays, we'll have this week, and then things will start obviously beginning really slow until that new year. Being said, let's go over the past week. Over the past week, we essentially had the core inflation. We've been waiting on core inflation. What is really interesting to see is that core inflation came in at 7.7 this past week. So there was another big drop in a lot of different things that essentially made the market explode. All right, we've seen this very continuous gradual decline in inflation, which is fantastic. Don't get me wrong. But one thing to consider is that your rates have been high for a very long time and are continuing to get high going for another month. So the impact of these rates are going to be seen in Q4. Q4 earnings, or again, in January, and I think they're going to be extremely bad. You're seeing many layoffs before another 75-point basis move was tacked on. So you have to be mindful of that. And yes, it's a great step forward. I'm not trying to dilute the information that came out about inflation coming in at 7.7. That's great. We are coming down. Again, I said we needed to come below 8 before things would get better. Great first step, but we are far from over. We have to understand the impact of what's going on with these rate increases, and we're starting to see that with these major corporations doing these major layoffs. And we have to also understand that the Fed has essentially said that the rates are going to be held at a specific rate for a while before they consider dropping it back down. So with that being said, we've seen the damage right now. The rates are going to have to be dialed back pretty quickly. But again, Powell's reiterated this is essentially his war against inflation. Until inflation gets underway, will he not essentially let off the gas? Now, that's great. We can come in another 50-point basis move or 25-point basis move in that next monetary policy, which is on the 15th, which I have here, or on the 14th, excuse me, of December. And we have one more core before then on the 13th. So the day before, we're going to get core, which is going to be interesting because it's going to essentially set the tone for 2023. But again, you have to understand that these impacts of these rate increases will be prolonged, and you have to understand what's happening. This past week, we also had FTX. Great example of what happens when rates are at a high, right? People aren't spending as often, and people aren't buying assets and doing other things like that because of that. And so that being said, it affects these companies that are over leveraged because the demand and the buying isn't there, and so they get screwed. And essentially what happens is it's a cascading effect. So all those people that invested heavily into FTX are essentially losing out on a ton. FTX had more news over the past weekend. They got hacked. They have 0 Bitcoin now, from what I understand. That story is going to continue to play out, and you're going to continue to get information about that. That's a black swan event in the crypto space. We have to understand there's a lot of people tied into that as well that is not in the crypto space, and understand that pensions and everything else are also involved in the FTX. So with that being said, there's going to be more of an impact. You have to understand people are all these layoffs and everything else, they are on severance packages. If things don't get worse, again, yes, great steps this past week, but they have to continue to get better, or one of these black swans will play out and then you'll start selling off again. You'll get another 15, 20% decline to the downside, even though we've ran. I don't even know what the count is. We can pull that up here pretty soon, but essentially from what was this? I think on that was another core, I believe here. And the core here, rip, essentially hopium, rip, and then PAL with policy, dive, and then when it come find out that core was great, and we just exploded up. So, and again, you have to still understand that inflation can come back at any point. It can peak back over 9.1 very, very easy. So you have to keep that in mind. And so we aren't just out of the woods. Being said, there could be a short-term rally. Again, end-of-year rally. There's no real major event unless one of these black swans play out. You have to understand there's still a lot of stuff that's going on. Europe the world is continuing to struggle. While the U.S. may seem like it's okay, but there's a lot of things that could potentially just bust at the seams, and that would be it. And we continue to sell off. We have to understand banks have the same amount of leverage and are doing the same exact things that FTX are doing, right? And so FTX can't get a bailout. Nobody's trying to bail them out for 9 point whatever billion it was. I think there's even more even tacked onto that for what people are discovering. This is what happens when these things happen. You kind of see what's going on behind closed doors. So the do as I say, not as I do kind of thing appeals to a lot of these CEOs that, they think they are on top of the world, and then come to find out that they've been over leveraged and get absolutely obliterated out of the water. And we saw this with Luna not long ago. And we're starting to see that with everything else. So from this point, this week, again, it's been pretty straight, simple before we started getting into Thanksgiving. You're going to start potentially seeing some slowdown. Again, two biggest pivot points. Again, there's some data that comes out this week. It could have some weight, again, but my most pivotal things I'm going to put on here until we get a more of an understanding what to kind of look for in 2023. And that will be based off this next core and this next monetary policy. And then off the Q4 earnings are going to kind of set the tone for 2023. Again, you have to realize January we'll get another core, February we'll get another core. So things will change around then. But again, we could still have a major black swan event occur around that February, March. Normal cycle is a down cycle. So we sell off pretty heavily around there anyway. But we might get one of these major events to play out during that time that could make it even more of an impact. So that's what I'm looking for the upcoming things, for the upcoming events. Still ways out. There's not really a lot this week. They got some housing stuff, some other data that could potentially sway the market intraday, but I don't think it's going to be anything pivotal. Again, earnings kind of getting towards the tail end. Earnings Tuesday, we have Walmart. We got some good ones. We got Target. We got NVIDIA this week. As you can see, SPX is kind of dialed back to 98. So essentially, the volatility they're expecting to come down a little bit. Tesla's still very high. Tesla's been held down because Elon's been selling a lot. I think Tesla could have a big rip this week if everything plays in line, starts running. I think tech in itself it's been one of the lagging techs, and I think if Elon's done selling his shares, then I think Tesla could have a big rip from this point. BA is still pegged at 9, and JPM still at 4. So with all that being said, the market in the short term, I think could have again a bit of a rally, right? You have to understand the market is very temperamental, and even though it seems like my decision is changing a dime, I've still always believed in my thesis that things are extremely bad. In the background, yes, things are extremely bad, and all it's going to take is one bad report, and this thing's going to sell off just as quick. But in the short term, right now, what I'm seeing is a price action at 3,600 is extremely strong to the long side, but and then you have a core backing it, showing a very steadily decrease in inflation, which is fantastic. We've had some of the bigger drops over this past, and then finally getting back into the sevens is great. So that was definitely a plus this week. Again, it's just the first step. It's not saying that we're going to completely pivot. Something I've said, I don't think we're going to completely pivot yet. There's still a lot of things. The rates are still very high. Nothing has changed there. That's something we have to be very clear of and understand that these high rates are going to continue to do damage as long as they are where they're at. And so they need to come down. But we'll have to see how long that is going to take before they do. So again, not too crazy on that on my notes there as it's been over the past 2 weeks. SPX again, monster ripper. But big thing coming into Monday is we have a huge wall here, essentially at the 4K20. We did get a bit of a heavy sell-off towards the end of the day. So really watching this level. Then we do have some pretty strong support, the 50 weekly at the 39.16. So potentially watching this to at least pull back there for a retest before attempting to maybe trying to hit back at the 4K mark. So I could see that potentially playing out this week. Playing a wider range this week, I think could be very much so. And then potentially might just chop here until beginning of new year, to be honest, because the next 2 weeks the volume is going to die down. May not be a lot going on. And so unless there's a major event, we might just chop between this area, which would make a lot of sense. It's still a big enough move, but nothing crazy. So that way we can kind of go into 2023, get the next monetary policy, get the next core, kind of see how 2023 outlook is going to be. I think is a very strong possibility. So we have to see how that plays out. One good thing is if you are going to the long side, you definitely want to see the dollar selling off heavy. Again, there's major support here at the 105. So you got about another dollar. This could sell off. And then you're going to get a pretty heavy or big bounce here. The question is, are we going to reject at the 108 and then continue to sell? Or are we going to break back through and attempt to try to go long? Now, we can look at some of these other time frames here. Again, it's great to see a good break. This does look like it's actually broken the trend here. But one thing is with breaking trends, typically you get a nice bounce and a retest. So I wouldn't expect this to completely go down yet. Again, there's a lot of black swans that could flip this thing very quickly. You got a lot of mysterious bond buying. It's not really mysterious, but understand that no one really understands where the funds for these bond buyings is coming from. But nonetheless, it's what's holding up a lot of this market, potentially saving the market from a lot of these overseas financial systems are being essentially being held together by duct tape at this point, and seeing if that will hold or not. But we'll have to see there. Tesla's like I said, I want to watch one this week because it's been held down a lot. And as you can see here, it actually touched 177 this week, which is absolutely crazy. And then we are popped back. So we really want Tesla back over the 195. If we can hold back over 195, I think we could start to make our way back up. Be a while. I think we got another about 2 weeks before we really start getting an earnings cycle. And I think this earnings cycle could potentially be positive as long as, since we have a good core, we have some good news coming out, which is helping the market, and I think could help tech turn around. I think the big thing with Tesla is, again, watching to see if Elon announces that he's done selling. I think as soon as he announces that, you can expect Tesla to rip pretty big from that point. So for that's where I'm really watching closely with Tesla to see if that does do that. But I do really like it around this level. Bounced really solidly off this monthly support at the 185. So kind of just keeping track of that. If Tesla does some way, shape, or form does break before 185, I think the market in general is in a bad position if Tesla breaks 185. But again, we'll have to see how that does play out there. BA, I don't have really much to say about BA. It's been a very strong value play. Absolutely ripper right here. But the big thing here, again, is you don't want these things to just rip like this, these parabolic rips, because it's going to pull back eventually, and at least the 50%. So you're looking at least at 50% move back correction from this thing. So just put you essentially around 150. Again, I don't like playing it because it shifts around a lot. But we'll have to see. A lot of these other bigger plays, smaller caps are great plays this week. SQ, Roblox, Airbnb, but they have popped too much. I'm looking more for a pullback. If we get a little bit of pullback, maybe looking to go long from that point, but that's what I'm looking for there. JPM, the banks, again, saying about the usual, but again, same thing, just like value. People are buying a lot of financials and value. You have to be very careful. Again, these things are running parabolic, and there hasn't been absolutely no pullback. That is not great, but when they do pull back, you have to understand that, again, they're going to correct a lot. 118 for JPM if it actually starts pulling back. I think strong possibility. Again, there's been a lot of things feeling the upside with the core and everything else, so you're going to have to see what plays out there. But that's pretty much what I got. It's pretty short and sweet. This week we have to see what events really play out. There's nothing big right now. But it's not saying that something can unfold like the FTX situation, potentially change the dynamic of this market. I think we're going to be pretty steady sailing as far as events until at least the next monetary policy and core. And until there, that will, again, really dictate what we're going to kind of see in 2023. So with all that being said, go ahead and drop a like button, and I will see you guys on the next one.